This video explains how to interpret historical charts for all sorts of suburb metrics. It's useful in the process of analysing a suburb for its investment potential. To see historical charts, you need a Lite or Pro membership. After logging in, you'll see the Suburb Analyzer page, and you need to select a property market to see its charts. I'm going to look at a few charts for Parramatta units. It's in Sydney's West. The link to historical charts will appear to the right of all the metrics for the suburb. Pick the historical chart for the statistic you'd like to view. Historical charts are used in suburb analysis for two reasons. The first is to check for volatility, and the second is to look for trends. Let's start with volatility. Auction clearance rates can be quite volatile, so let's have a look at the auction clearance rates historical chart. Although Parramatta units is a very large market with many units, they're not often auctioned. So the auction clearance rate metric is unreliable. And you can see that in the volatility of the chart. By volatility, I mean that the chart goes up and down radically from month to month. These wild, sudden swings don't really reflect the change in supply and demand. Rather, they reflect a small volume of data. Property markets are very slow. The mood of buyers doesn't change day to day like in the share market, and it takes a long time to supply new dwellings. So you don't usually see wild swings in supply or demand over only a couple of months. So every metric is merely an estimate of supply or demand, not a precise read. Now imagine there was only one auction every month, and every second month the property sold, but every other month the property was passed in. The auction clearance rate would oscillate between 100% and 0% every month. The average for the year would be 50%. That might be a better gauge of supply and demand. But on any given month, we would be misled to believe demand is either extremely high or extremely low. And that's why we need to check historical charts for volatility, so we don't get misled by the latest month's figure. And the latest month's figure for the auction clearance rate of Parramatta units is, well, it's a smidge above 50%. That sounds quite ordinary, but if we were looking in May 2022, the figure would have been 100%, which is perfect. With the chart, we can see that for the last year, the auction clearance rate has moved above and below 75%. 75% seems like a decent estimate of the true nature of supply and demand for units in Parramatta. But not all properties are sold by auction. So again, this is not a precise read on the nature of supply and demand for all units in Parramatta. Anyway, without the chart, we would be misled, especially in May and August. Let's look at another market. This time I'm going to choose a very small market. Elizabeth Hills is a small suburb in Western Sydney, and I'm going to look at two charts I always check for volatility. The first is the vacancy rate. And as you can see, the vacancy rate chart is very volatile. First of all, there are not many houses in Elizabeth Hills, and therefore not many rental properties. So when one becomes available, it has a big effect on the percentage that are vacant. If there are only 100 rentals in a suburb and only one becomes available, then the vacancy rate jumps by 1%. And if it gets rented, the vacancy drops by 1%. For any given month, we don't really know the true supply and demand of rentals. But if we run our eye through the last year of vacancy figures on the chart, we can guesstimate that the true nature of supply and demand of rentals in this suburb is probably a bit under 2%. The other metric I always check for volatility is the most important metric on the website, the demand to supply ratio, or the DSR plus specifically. It's only available to Pro members. This metric combines 17 other metrics, so you'd expect it to be far less volatile than most other metrics. But this really is a thinly traded market, so you can still see some wild swings. Imagine we were back in June 2022 and looking at the DSR Plus for Elizabeth Hills houses. It was 77 back then, but a quick check of the chart and we would have noticed that for the month prior, it was about 20 points lower. Back in June 2022, a DSR Plus of 77 looks like an anomaly, a one-off caused by low volume of data. I would have immediately rejected this market because of that volatility. This is not a potential investment opportunity. But now looking at the historical chart, there are 2 more months of similar DSR Plus scores. So now I have more confidence that this market might be a decent opportunity. And there's something else too. And this brings me to the other reason I check an historical chart: trends. Looking at the last year of DSR Plus figures, it looks like demand has been haphazardly rising relative to supply. This gives me more confidence in this market. Let me go back to Parramatta units for another good example of a trend. There's been a tremendous amount of development in units in Parramatta in recent years. A lot of investors are lured into off-the-plan high-rise units by glossy developer brochures. And the vacancy rate went up to about 5%. That's from, say, mid-2020 to mid-2021. But there hasn't been much development since the glut, and instead there's been a nationwide rental shortage. And you can see this in the historical chart. There's a clear trend of reduced supply of unit rentals in Parramatta. There was news in the property investment community about the oversupply of units in Parramatta, but now you can see that oversupply has been absorbed. So if you were a worried landlord of a unit in Parramatta, things are now looking good. Okay, so make sure you examine historical charts for the key metrics like the DSR Plus and vacancy rates to check for volatility firstly, and you might also notice a trend to give you a heads up as to where the market is heading.